All right, good evening, guys. Normally I do this trade plan in the morning, but I'm going to be doing it in the evening. It's about 9:45 in New York here, and I'm going to be going over some things tomorrow morning. I have a 6 a.m. flight, and Perry will also uh, not be available, so I just wanted to make sure you guys got a video. And title of the video is going to be a day frame for Thursday. So I've been talking about this indicator a couple, just once or twice, and it is something I'm going to release. But I want to show you a little more about how it works. And I'm going to start off with the Nasdaq here. I just realized my prices are usually I usually have Nasdaq on the left, but so there's a couple of lines that you're seeing, and I'll explain what each of them is. The light blue line is the 50% of the entire move of the prior day. Okay? So, like if we're looking at last Friday, you see this light blue line lines up right with the 50% of the prior day. Now, the green line appears if we are below the 50% of the prior day. And what that is it is the 50% to the prior day's 50%. So it's I call it lower mid. Okay, so there's lower mid, which is going to be the green line, and that's anytime we're below the prior day's 50% retracement. But if we're above the prior day's 50% retracement, like we were on Monday, I call it upper mid. And you can see this 50% retracement here to here. You can see this acts as a support level. So one of the things I've noticed as I've developed this indicator with Perry is when when we are above the upper mid, you want to make sure we stay above that. And if we end up cracking below it, we have a chance to basically begin a downtrend. And so this morning we were going into news events, and this was obviously a huge reaction. This 5 minute candle is 307 points. We were above the midpoint, okay, which is the blue line, as well as the upper midpoint. As soon as we cracked that upper midpoint, we dropped down through the midpoint, the 50% retracement, and then actually made new lows, taking out the prior lows day. Once we got down through the midpoint, the blue line, we will put in a lower mid, and that lower mid will adjust with every new low. Now, the 5 minute candle it printed was 370 points, so the first time we actually printed a lower mid was all the way down here. Now, this morning, I was actually thinking that there was a possibility we could continue lower, but we didn't. One of the things you're going to want to see if we're looking for continuation either to the upside or the downside is for us to actually stay below that lower mid. And that if we stay below that lower mid, we're most likely going to continue to trend lower. But what happened off the open here today is we opened 9:30 and within 25 minutes we had crossed back above the lower mid, and that signifies a trend break. And at that point in time, you can begin to look for longs. And that's exactly what we had here. We had a long, and where did it stop? It stopped right at the prior day midpoint. Okay? And then we actually ended up getting back above that midpoint, and that midpoint was resistance, support, 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 and all the way through. So carrying that forward here, I'm just going to explain, how this works. As we go into Thursday, I won't be here, okay? But what I want you guys to pay attention to is the upper mid of tomorrow, which is going to be if we make a new high, you're going to have to adjust. But if you were to draw the midpoint of the prior day, which you can write this number down, 21,600 and let's call it 86. We'll round up a tick. Wherever that 50% retracement is from 21,686, you're going to want to see the market stay above that. And as long as we do, we're going to be bullish going into tomorrow. And then we move to the S&P. I'm not going to go through the entire lesson of midpoints again, but what I'm going to do is just explain the same theory. The midpoint of today that's going to carry forward is going to be 60.58 half. And we're going to take 60.58 half to whatever the high is, and that's going to give us that upper midpoint. Right now that's 60.72. So 60.72, I'll just give you guys a screenshot here. We got the midpoint being 60.58, and 21,685. That is will not move. That will not move today. The upper mid can move with every new high, so keep that in mind. But right now, as of basically 10 o'clock East Coast time p.m., it's 60.72 half and 21,800. Now, if we're holding above those levels tomorrow, I would be looking long. If we crack below them, look for a potential move down to the midpoint. Okay, and that's just like an easy way I've learned to frame the market. Especially for people who are beginners. Now, I can go into my full analysis here as well if we're going to be looking at um, what I look at every day, but those midpoints and paying attention to that, there's only one screen I can really broadcast during the day. Otherwise, I'm just going to confuse everybody. But I want to go over that in my morning trade plan. Now, going into tomorrow, let me just review some higher time frame setups here. Now, we failed to break lower here, and we continued to basically hold this halfway back that has an upside target of 22,000. If we can break out of the top side of the range here today, we are going to be on our way to first, I think, these prior highs here that go back to January, and then eventually up into 22,000. This is quite a bullish candle. So tomorrow, as long as we're holding, once again, that upper midpoint, then you're going to want to be looking for longs and a continuation of that breakout. If we get below that, then you can go ahead and negate that. And as far as what we have here for the ES, if you look at the overnight session, we had this 50% retracement. We pierced the 61, rallied to targets. Pierced to 61, rallied to targets. And at that point in time, we drew from you could draw from the 50. Okay, anytime you break a 61, you can draw from the 50. That is what we're holding. That upside target is 60.93. And then tomorrow, you're going to look for that next traditional here. That next traditional from this 2 o'clock low to high. And for the NASDAQ, I think there's a possibility we actually start extensions from the 1035 high to high. And that's going to keep us above that upper mid. Now let me just go ahead, just load something up here. Let's see where those upper mids are real quick. Yep. All right. Cool. Yeah, that's what I'm gonna have here as we go into tomorrow. I'll share these levels with you guys in the room, and then just you're gonna have to write down those upper mids. But I'll see if I could figure out a way to automatically share with those in the future. If there's anybody who's interested in the day frame indicator, I am gonna just do a release to the first like 10 people. So I'm probably going to do that on Monday. If you are interested in it, just go ahead and shoot me a DM and I'll put you on the list while I build the web page to take it out. It is going to be priced at $300 one-time lifetime use, and let me know if you're interested, because the first 10 people are going to get $100 off. So let me know if you're interested in that. It's going to be $300, but the first 10 people are going to get $100 off, so $200 on this day frame indicator. Just shoot me a DM in the room, and I'll build the web page and send it to you with the discount.